Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go. It's generally related to three different topics: wealth building, commodities, and or financial topics. So we're going to dive right in, take a look, and see what people are sharing. I know this one has a little bit more of some things that I'm sharing. So let's dive in, take a look. If you want to follow me at Finding_Finance, and if you want to join our community, finding-value.com, where I dive deeper into the individual companies and sectors looking for investment opportunities, and I will share those investment opportunities with you guys. I also talk about what I look at and kind of how I evaluate the macro environment for the investment world and space. We still have a coupon code Mayday going on, MAYDAY. So starting for the first one here, which is myself, gold and silver miners are very cheap against gold and silver. Still not too late to be shopping around for bargains. So XAU divided by gold, you can see we've got this downtrend line that we are breaking out, and we're at a very low level. So when zooming in, you can see that we've broken out, we've done the retest, and we are about to head higher here. And XAU is the gold and silver miners that we're using as a proxy for them. So this is where potential life-changing gains come from. They come from being early. They come from taking a contrarian approach where people are not at. And we are probably very early stage of a gigantic bull market in precious metals. That's what this is stating. Keep in mind, last bull market, we had the XAU to gold ratio fall. It started in 99, 2000, somewhere in this region here, and it actually fell lower into 2011. So last bull market is not going to look like the bull market that is coming in front of us, in my opinion. And this is what I'm using to generate my opinion about it and to hold that the gold and silver mining companies could go up more so than last bull market. I've got, is gold going to outperform the consumer price index? Kind of looks like it's going to give it a try here. So longer term, we've got this resistance line and we're getting right up by it. We also have from 2000 a big move higher. We hit our head at 2011. We generated a cup and a handle, and we've broken the handle portion to the upside, and we're back to resistance. We could try to break to the upside here to outperform against the consumer price index. If you zoom in on the right-hand side, this is what it looks like. We have a wedge formation that is broken to, yet again, the upside. So that looks really good. We've got a little bloody nose there where we could continue higher. That's a continuation pattern. And everything looks good to continue on up. Looks really solid. We got GDX here. GDX looking strong here. And GDXJ just under resistance. But short term, it looks like it's going to give it a try for a breakout here. So GDX, you can see that we've got a nice, good setup. Basically a double bottom, a breakout, and a retest. And we've broken out of the flag pattern to the upside. If you zoom in on it, there's another flag pattern that's breaking, and that's that resistance line below us of the trend line. So it's a breakout retest, and then now we could potentially fly here. GDXJ, we're right underneath resistance of this longer term resistance line. We've broken out of the trend line here, and we're trying to break out of the horizontal resistance line. And there it is, breaking the flag pattern to the upside. So it's going to give it a try here to see if we can break through this resistance line that's just above us. So gold and silver mining companies were coming from a very cheap valuation level. That's what the XAU gold is. And then on the shorter term, we're trying to break out of all these different patterns. Some of them are already broken on the larger companies, and then the smaller ones, we're trying to break some horizontal resistance. Everything looks A-okay to me, and everything looks good to try to work its way on up. Which direction do you think bond prices, TLT, are heading? We've got a squeeze here, and we could potentially break to the upside, but we are still in the squeeze state. Could this break down where yields continue higher? It's possible. It's also possible to break to the upside where yields go lower. If yields do track lower, I think that we're going to see all of GDX, GDXJ, XAU to gold, it's all going to outperform. And with how these are located, it makes me think that TLT is going to break to the upside at some point for a period of time. We'll see. Uranium futures pricing looks good with a falling wedge. URA does not look that bad either. So here is the futures pricing. We've got a falling wedge, and maybe we've got a little bit more to go on this falling wedge before we break. And then I've got URA here, and that still looks pretty good. We've got a nice good uptrend line going on, and we've broken out of the bottom. This was your consolidation on top of the breakout. And we've been moving higher. So everything still looks good for URA. The equities and the futures pricing still look fantastic. So I don't know why everyone's so bearish sentiment-wise on uranium at the moment. Here's another one. I said coal is not dead. Breakout, retest, and now a possible shorter-term breakout. Here's your big stage 1 breakout to the retest. If you zoom in on the right-hand side for coal, you've got another falling wedge that's broken to the upside here. Looking pretty good. So coal is looking pretty solid here and pretty strong, and it mimics, what uranium's doing to some extent, and it also mimics what gold is doing, breaking out. Now let's look at some of the other energy sectors here. XLE and XOP for energy looking interesting here. Let's see if we can get any liftoff. Individual companies also looking interesting. So XLE is a large exploration production company fund. You can see the 3-hump consolidation there. We've come all the way up to some resistance, and we're trying to break through that resistance right now. Now, we broke through it temporarily, and I think we're doing a retest. So if you zoom in on the right-hand side, there's your breakout, your retest, and then we are breaking back above that trend line on the upper side. Well, let's see if we can get liftoff here. We'll see if crude oil can get some momentum and if the equities can start to get some momentum here. XOP is another exploration production for oil and gas, a little bit smaller companies in this one. We have a neckline here of an inverted shoulder head shoulder potentially, and we are breaking that to the upside, and we're doing a retest. If you zoom in on the right-hand side, get a little bit more clarity there. There's your breakout, your retest, and we are starting to break the upper trend line of XOP here, right at the neckline. Again, maybe we can gain some momentum here, generate some momentum to the upside and get moving. But it's looking pretty good. Grady here, so says, been saying I love this seriously great, very big picture setup. Just like silver was, platinum was also sitting right below a huge blue generational breakout line. And now he thinks it's broken out with the monthly close. Note that the orange is a 10-year bottoming consolidation. So it should have some massive energy stored up here now to be released. Even before I called the commodities bear market low back in 2020, I said platinum will outperform gold and silver in the coming bull. Pioneering platinum case on FinTwit. As said since called the start of the 4.5 years ago, get ready for the greatest commodities bull market ever. It will be your greatest market opportunity in your life. So here's platinum on the linear monthly. This is a 16-year bullish falling wedge. We've got some resistance above us. And then we've got a 10-year bottoming consolidation phase, which equals the bigger the base, the higher in space. And we have a recent breakout for this downtrend line that's just been broken out. Looking absolutely fantastic for platinum here. I like how these are all, we've got confluence with all these different commodities. XLE and energy, platinum, gold and silver at the top there. We've got coal futures there. Uranium's also looking real good. Nice, good confluence of all these charts. The thing that I do is I stack that information all up and I say, this looks pretty strong across the board for commodities. We're probably going to have just an absolute ripper here at some point. I can't tell you exactly when the exact moment is. I can tell you after it occurs, but I am positioned for all these moves. This is like playing chess here, guys. You don't win the game after the other person takes all your pieces, game pieces. You win the game by thinking ahead, by positioning ahead of them, figuring out where they're going to position, and get them in a difficult position that they can't get out of. That's very similar to playing the game of the stock market or commodities or whatever market you're playing. You want to position ahead of the move, and you're doing it before everyone else positions. You're going to put the market's going to put these commodities in a difficult position to stay at the prices that they're at. So the supply side, it's going to squeeze. We've got credit expansion and fiscal spending. It's putting the commodities in a really good location for a potential breakout / to win the game. So these are all looking fantastic to me. Here's URANIum divided by the Sprott Physical Uranium Trust. Uranium equities to outrun spot by a mile, in his opinion. Chart indicates the run has just begun. Longs, be patient. It's on the horizon here. So URANIum is breaking out against the Sprott Physical Uranium Trust, and it looks ready to rip. It does, actually. Looks very good. So get some of your uranium juices back flowing. You want to be bullish when everyone else is bearish. That's the name of the game. You want to buy when everyone else is telling you it sucks, that they're frustrated, they can't wait any longer. Take all their shares. Screw it. The big moves haven't happened yet. We've got these big lead-in patterns for wave 1. I think we're at the bottom of wave 2 in a lot of things, and we're in these big breakout patterns that are about to launch here. I was showing some of this here. This is ARC Resources. They're buying back shares, cancellation 200,000 shares. New Vista Energy, another cancellation of 428,000 shares for approximately 5.8 million, and a sale of 20,000 shares for approximately 284,000. These oil companies are starting to buy back shares with quantity. I want to be involved in that. And I'm not saying these companies in general. I'm just saying that across the board, this is what rich looks like. This is what making money feels like. And I know a lot of people, retail sectors, they want to go dive into these high risk, very speculative companies. That is not what money looks like. My opinion, when you start seeing these big share buybacks coming across, that's what money looks like. That's what winning looks like, feels like, and what companies should be doing with some of their cash flow. Maybe not all of it, but some of it. So ARC Resources, New Vista Energy, I've got some other ones down there too. They're all buying back shares, guys. That's what a good sector looks like. And those are all oil and nat gas. Bitcoin is making another greed enticing top, suckering in tens of billions of excess liquidity into a price which appears ready to make a rug pull dive. I dump BTC here, a store of price risk, rather buy a clearly defined breakout than hodl it with a 50+% more short-term downside risk, in his opinion. So maybe Bitcoin is topping, at least in Peter's opinion here. Vancouver, so this is another one, Suncor Energy, cancellation of 5.8 million shares for approximately $296 million. That's a lot of shares, guys. It's a lot of money, too. Daily Chinese market report, silver's up to 34.22 on the futures. And the drain on the vault continues from the west to the east of silver and gold with this differential they've got going on here. China asks state firms to add some 60 million barrels of oil to reserves. Looks like they're adding some more to reserves, and you know what's going to be needed? They need to ship it there. They need to ship it there. 60 million barrels of oil to reserves. So UBS predicts the AI industry revenue will grow at a 72% CAGR from 83 billion in 2024 to 420 billion in 2027. The semiconductor ecosystem is complex, but here is my simplification my 20 favorite companies within the space, ranked from most to least expensive based on 2025 metrics. And he's got all of these different companies if you guys want to see that. The only thing I will say is what could prevent AI from being adopted as quickly or as fast as they think it's going to be adopted. I am going to say that the power in the system could limit the adoption speed. So I'm playing this with the charts that are bottomed in the energy space. I don't want to play it in AI directly because there's so much money over there that it's already in bubble territory. So I don't want to touch those. And maybe they go up more. I just think that the symmetry is a lot better in the commodity space to play it with energy, maybe even copper, and some of these other sectors than it is to play it directly with AI. And if we get the squeeze in, say, something like copper or energy, I think they are going to squeeze and hurt the AI companies that maybe can't adopt as quickly as what these guys are thinking they can. Investment wisdom, Warren Buffett says, we look to business performance, not market performance. If we are correct in expectations regarding the business, the market will eventually follow along. So he evaluates the business, not so much the stock price performance. Lately, every oil and gas macro discussion I have is to educate sophisticated investors in the need to develop greater than 20 million barrels per day of new liquid supply by 2034. China already knows this. And China has planned for the new round of SPR filling from July to March. Will this new government mandate reverse the current soft crude import demand picture? We've got silver, the best performing asset in the first half of 2024. Did you see that, guys? Silver, number one. We've got NASDAQ. We've got S&P 500. We've got oil being up there as well. Copper, gold. These all sound familiar to me. All these silver, oil, copper, gold, Brent crude. And then on the opposite side, the Japanese yen's struggling. The currencies are struggling. There's bonds over here too. So bonds and currencies are eating it on the right-hand side. Ed, the shipping investor, 60 million barrels equals 30 VLCCs. Is that a lot? Asking for a friend. So 60 million barrels of crude is what China's trying to do. They're going to do it between July and March. And then the 5 state firms are those guys. And again, we could get some shipping activity, VLCCs, and I think tankers look pretty good. Okay, I thought this was funny, guys. So I was just scrolling through, and this guy writes, do the opposite of what the government recommends. It says, avoid eggs. Eat 3 to 20 eggs daily. I eat about 5 eggs every single day. Limit red meat. Eat steak daily. I actually eat steak almost daily. Avoid butter, and I actually eat butter with the eggs. Limit salt. I don't eat too much salt. Avoid the sun, and yeah, I get sun here. Congrats, you just won your health back. That's basically what I eat. I mean, to the T. That's what I eat. Not saying that you should eat that way, but that's what I do. I just thought it was funny. That was everything that I eat basically every day. Pick your fighter here for global demographics. This is U.S. U.S. doesn't look too bad out in the future. It's still growing. We've got Eurozone that's declining. China looks pretty rough here, guys. That's a pretty stark decline. And then population by UK, it's holding in there. The demographics does determine stock market performance. India probably looks pretty good. And that's where I would probably look first. But USA looks good too. It doesn't look that bad. Investment wisdom. We have to invest in the world we live in and not what the world that we want. So invest in reality, not in what you think reality should be. We've got U.S. oil production as of this moment in time is averaging 13.15 million barrels per day. It's going to be vital to the oil market to set up going into 2025 just how much U.S. shale increases oil production this summer. If production is flat to October, then it will signal a real slowdown. But This is the real-time U.S. oil production tracking. We're looking to see if we get a slowdown or not here, if we turn either sideways or lower on U.S. real-time oil production. So we'll see what occurs over here in the next year. But that's something we should all be tracking. And that's what I've got for today, guys. So we'll end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Mayday coupon code. We've got a Saturday question and answer session at 7 a.m. So if you want to make that, go ahead and be there. And I'll see you there. You can bring whatever questions you'd like. And I'll probably talk about this weekend. I might chat a little bit about how I would set up a portfolio in the companies that I would be doing it with. And maybe we can go over that again. I know a lot of people have questions about individual companies, how would I set it up, et cetera, et cetera. So let's just go through some of the companies and maybe how the ones that I would favor and the ones that I would put some more weight behind. So we can talk about that this weekend. But that's all I've got for today. We'll catch you next time. This is Finding Value.